Welcome to another edition of By the Numbers, where we take a deep dive into market affordability. We'll show you real properties and give you real solutions. Today, we are going to be looking at a property in Traverse City, Michigan. 1205 South Union Street, Traverse City, Michigan, 49684. List price of $425,000. This was found on Zillow as well. Listing is provided by Ann Porter of REOTC Randolph. You can see the link below for Zillow. So today what we're going to be doing is we're going to be breaking down the numbers by the actual list price, which was $425,000, asking for a price reduction of $20,000, and then the final number we'll be looking at is seller concessions, where we take those seller concessions and use it to buy down your interest rate. So let's take a look at what we have here. So when you go into this looking at to offer full asking price of $425,000, and here's basically what we use. We're going to use a first-time homebuyer program for a primary purchase. We're using a 740 credit score, and then I'll break down all the other numbers. So starting with the full asking price, using a conventional loan with 3% down if you qualify for first-time homebuyer, gives you a loan amount of $412,250. We're using a 30-year fixed rate mortgage. This morning when I ran the numbers, that was at a 6.375% interest rate. Your down payment with 3% down is $12,750, and then anything with less than 20% down requires mortgage insurance, and that came in at $299. Moving on over to FHA. Again, your loan amount, again, same parameters. Purchase, primary purchase, 740, first-time homebuyer. 3.5% down for this FHA loan, so your loan amount would be $410,125. Again, 30-year fixed rate mortgage came in at 5.625%. Down payment amount will be $14,875, and again, that mortgage insurance coming in at $188. And then the last bracket that we'll look at will be for a VA loan. VA loans do not require down payment, so it's the full loan amount is the asking price of $425,000. Still looking at a 30-year fixed rate mortgage, and that rate came in at 6%. Also, and if you qualify under the VA for the zero down payment, they do not require mortgage insurance either, so that is why it's showing $0 in that field. So what does the price look like when you have a purchase price of $425,000, that 6.375 interest or the 5.265 interest or the 6% interest? What does it look like at full asking price? We're going to break it down by what we call PITA, your principal, interest, taxes, and insurance. So for your conventional loan, you're going to be paying $593 towards your principal, $1,979 towards the interest. And in this scenario, we're only using a generic homeowners insurance, PMI, HOA, and we did not enter an HOA in this. So $423 for your combo pack of the PMI homeowners insurance. Taxes came in at $446, giving you a grand payment of $34.41 per month. Now, keep in mind, if you put down 20% or more, you would not have that private mortgage insurance. Okay. So moving on to our FHA loan, $646 would be going to principal, $1,715 towards the interest, $312 towards that combo pack, homeowners insurance and mortgage insurance, and then the taxes remain the same at $446, giving you a monthly payment of $31.19. And then finally, your VA loan comes in $640 for your principal, $1,908 to interest, $124 for your homeowners insurance, HOA, PMI. Again, this one does not have PMI, which is the mortgage insurance, so that's why that number is drastically reduced. And then the taxes are the same at $446, giving you a grand total of $31.18 per month using a VA loan. Okay, so now what if we were to ask for a price reduction? Well, we're going to take in this scenario the 20% price reduction, and based on that, let's take a look at where we're at. So your loan amount comes down significantly to $392,850. Again, we're still looking at a 30-year fixed rate mortgage, same interest rate, 6.375%, and then the mortgage insurance came in at $285. Moving on to the FHA, $390,825 4-year loan amount, 30-year fixed rate mortgage came in at 5.265%. That down payment is $14,175 for that 3.5%, and then the mortgage insurance came in at $179. And then finally, for that VA loan, again, no down payment required, so we're at that full $405,000 for the purchase price. 30-year fixed rate came in at 6%, and again, no mortgage insurance required. So the payment on a price reduction would look like this. Again, same PITI or PITA as we call it. Looking at $565 going towards your principal, $1,886 going towards interest, $403 going to your combo pack, and $425 going towards taxes, giving you a grand total of $32.79 per month. Your FHA came in at $616 for going to your principal, $1634 going to interest, $297 for those combo, and then $425 again for taxes, giving you a grand sum of $29.72 per month using an FHA loan. And then finally, your VA loan came in at $610 going to a principal, $1818 to interest, $118 for your combo pack, and $425 going to taxes, giving you a grand monthly payment of $29.71. And then our final review is going to be for asking for seller concessions versus a reduction in price. So full asking price again, $425,000 is that asking price. Your loan amount using 3% down would be $412,250. Again, 30-year fixed rate mortgage, this time buying the rate down to 5.5% or using $7,730 going to a rate buy down. Mortgage insurance still came in at $299, and again, that is for a 30-year fixed rate mortgage. Reducing it using seller concessions, buying the rate down to 5.5%. Moving on to the FHA, $410,825 is the loan amount. 30-year fixed rate came in at 5% using $6,800.24 in points, or 1.661%, and that rate is drastically reduced down to 5%. Your mortgage insurance came in at $188. And then finally, your VA loan, $425,000 30-year fixed rate came in at 5% as well, using $8,160 to buy down that rate, or 1.92% in points. Now, what does that do to your payment? Let's take a look at that PITA. Your conventional loan, $660 goes to that principal, $1,681 to interest, $423 to that combo pack, and then $446 in taxes, giving you a grand total of $32.10 per month for your monthly payment. Your FHA loan comes in $697 for principal, $1,508 in interest, $312 in that combo, and $446 for taxes, giving you a grand monthly payment of $29.63. And then finally, that VA using points, $721 goes to principal, $1,560 to interest, $124 for that combo, and then $446 in taxes, giving you a grand monthly payment of $28.51. Now, I'm giving you a lot of numbers here. So what does that look like when they're side by side? Now, I'm going to break down each one of these different loan types and what it would look like side by side. So full asking, obviously there'll be no savings, so your monthly payment will be $34.41. If you didn't ask for anything, you just bought as is. If you were to ask for a $20,000 reduction, we're going to take that full asking price monthly payment, $34.41 a month, and we're going to subtract what your new payment would be, asking for that reduction of $32.79, and you can see you would save roughly $162 a month asking for $20,000 price reduction. And then our last area, we're going to look at the seller concessions versus asking for a price reduction. We're going to use those concessions to buy down the rate, which we call a seller funded buy down. We're going to take that original asking price of monthly payment of $34.41. We're going to subtract the new payment with the new interest rate, which would have been $32.10, giving you a grand savings of $231 a month. Significant difference, even though there was a significant price savings between the two. So this was only, I believe, $7,000, $8,000 in seller concessions versus the $20,000 reduction. So, and you still are ending up better than you would if you asked for that reduction. So, not bad. Let's move on to the FHA. So, full asking price, you would have paid $31.19 a month. We're going to look at the reduction now. If you ask for $20,000 reduction in price, your payment would have been $29.72. The difference being $147 a month in savings. And now to those seller concessions, using it to buy down your rate. Again, we're going to take that $31.19 and we're going to subtract your new monthly payment of $29.63, giving you a monthly savings of $156 a month. Very similar in that price reduction and that range, but still, savings is savings. So even if it is $9 a month, it does add up. So moving on to our final is VA. So $31.18 would have been your monthly payment if you didn't ask for anything. Asking for $20,000 reduction, we're going to take that $31.18, subtract to what your new payment would have been, $29.71, and you would see that you would save $147 a month. And then asking for concessions in lieu of a reduction and using that money to buy down your interest rate. And take that $31.18 again, subtract your new loan amount of $28.51, and that gives you a grand savings of $267 a month. Now, I'm no mathematician, but in my humble opinion, the numbers don't lie. Seller concessions far outweigh asking for a huge price reduction. Not only is it a win for you, but it's also a win for the seller rather. So everybody can walk away with more money in their pocket, save over time. So conclusion, those seller concessions are the way to go. It's a buyer's market in most areas right now, so let it work for you. Most sellers are looking to get rid of their properties just as they were before, but now they have to give a little bit more incentives. So use this information to get you the home that you want. If you have any questions, I'd be happy to run the scenario on a particular home that you want, or just drop me a comment underneath and all my information will be listed. Have a great day. And for all of you agents and loan officers out there, check out our agent growth classes. We have classes such as ChatGPT and AI for your real estate business, Instagram Reels, hooks and scripts, embracing the shift, all these to help you grow in 2023 and beyond. If you're not interested in any of those courses, check out this section. This is our education courses. We have things such as seller-funded buy-downs, how to use gift funds to sell more properties, credit issues, facts versus fiction, and then things like simplifying condo financing. If any of these ring a bell, go ahead and scan that QR code to the left side of your screen and set something up.